Welcome to the Real Estate Majlis podcast, where we dive into the latest real estate insights and trends. Whether you are a seasoned investor or a first-time buyer, our podcast is here to provide valuable information and expert advice. This episode is powered by Bayut, the UAE's leading property platform and proud member of the Dubizo Group. Whether you're buying, selling, or renting, Bayut connects you with real estate solutions tailored to your needs using innovative tools like TrueCheck, TrueEstimate, TrueBroker, and Bayut GPT. From finding your next home to advertising your listings with confidence, Bayut offers real photos, real prices, and real properties, helping you make informed decisions in the market.
Welcome to Real Estate Majlis, Cecilia and Mahmoud. We're very excited to be with you today, Abdullah.
It's a pleasure.
We have a very prominent guest with us,
Yes.
Mr. Abdullah Alajaji, who is the CEO and founder of Driven Properties. I know you for almost 10 years.
10 years, yeah.
I see a lot of gray hair.
It changed. Now it's grey. It wasn't.
But that's a good
no,
sign. That's a good sign.
This means experience, right?
That's true. That's true. Wisdom, experience, and it's nice also.
Yeah.
I agree.
Salt and pepper. It's silver. It's not grey. That's it.
Silver, huh? So the question with all of this experience, Abdullah, what was your hardest lesson you learned in Dubai real estate market?
It's a highly competitive market. If you're in an industry that's competitive, there is thousands of brokerages and tens of thousands of brokers. So how do you find that economic moat that really sets you apart, that gives you that competitive advantage? And that's a combination of the culture that you build, the people that you have, and very importantly, the tech that you've established, and your ability to move fast, and your ability to leverage on the experiences that your team has and that your talent pool can bring to the table. So we've thankfully established that moat over a longer period of time, working on machine learning techniques, on predictive algorithms, that really gives us access to trends before the market, because we're in the market prior to the consumer.
Hiring talent in the market is not easy. What do you look for when you're building a team of brokers?
Really, it's a combination, Cecilia. We look at the attitude first. They come from an experience in sales, and when you see the right attitude with these guys, it's always telling that these guys will be great brokers. And if they're cultured and molded into a team of greater talent that shadow them and vice versa, especially if they're coming to the market as newbies, then it becomes easier for them to become successful brokers.
There is a quote says, hire for attitude, not aptitude.
Yes.
Yeah.
Knowledge, you can pass it to people, but
True.
Their attitude towards working in teams, this is something cannot be taught.
Yeah.
The question again, and back to at the beginning, you mentioned there's so many agencies in this market.
Yeah.
So what's your secret sauce? How do you make sure you compete, and what's your winning strategy, if you can share?
So yes, sure. So we've developed from a run-of-the-mill brokerage into an ecosystem. So we've now have several verticals that service the brokerage, and the brokerage just became one of these parts. So if you look at it more objectively, we do greenfield, we do brownfield, all the way to your sales and brokerage. So in greenfield, we've gotten into development. We focused on a niche, which is the ultra high-end luxury market, and we saw that need from us being in the market. Brownfield, we do a combination of acquisitions. When we see an opportunity in a market or a sub-market, then we move on into these opportunities. We did that in partnership with government entities, with government developers, and with the private sector. And then on the sales and leasing and the commercial side, that's our core business. So being in all of these verticals together gives us that competitive advantage, gives us the access to information earlier, knowing what's happening in the market, access to trends, and gives us the opportunity to leverage both from a financial perspective. So we do a lot of acquisitions as well. That's what really sets us apart from a competitive standpoint. And we use the tech tools that are now in our disposal to really make better decisions. And I think that's the secret sauce.
We started 25 with a lot of reports that the market continues to be bullish. Do you see the same pattern of buyers from last year, or you've seen a change in 25, different nationalities?
So the beauty of Dubai is that there are always buyers from all over the world. We see it today, obviously, Russia-Ukraine conflict has brought in a lot of Russian buyers over the past few years. But today we see a lot more Indians, for example, wealthy Indians from Southeast Asia. We see a lot of people coming in from the UK specifically because of the Labour Party and the non-dom restrictions and the likes. And then Europe, Germans, French, Spanish and the likes. And let's not ignore, especially today, China. China is a beast, and now they're obviously dealing with their own problems with the property market, with the general slowdown in the economy, and they would be looking at other markets. They would be looking to diversify away from their local market into global markets. We've seen them going into the Bangkok market in a big way. Greece is a big market for them as well. And Dubai has always emerged as a neighborhood that's close, that's exciting, and we're already seeing green shoots of recovery from prior to the pandemic to today, because the Chinese were very big buyers. And you remember, Dr. Mahmoud, for us, Chinese buyers were the largest buyers, and we've established solutions for a lot of developers at the time that the market was completely different back then. We established a lot of solutions for developers back then, whereby we would be bringing in buyers from China to underwrite full developments in areas like Business Bay. We're seeing green shoots of recovery in that market. We're seeing the Chinese slowly coming back, both from Hong Kong and mainland China, and that's exciting to see.
Is this market nowadays a buy or sell, rent or buy? Where do you see things going?
So I think, look, it's always been a tough market. We were talking about this earlier, and you and I were debating. Are we going to see a correction? We've been talking about a correction or kind of a stabilization of prices in 2023. And you mentioned that you even started considering exit options then. Every year is the same. And today, the good thing about Dubai is that the legislation, the reforms that they've built, as well as the Urban 2040 plan and that focus on sustainability, all of these things together with a thriving global economy as well, you can't help but think that the market will continue to be strong. And today the market is still much more affordable than markets outside of Dubai. You look at places like London and Tokyo and Miami, where it costs you can only get maybe 60 or 70 square meters for every $1 million spent, where you can get a lot more here. And it also takes you 40, 45 years in places like Munich to get your money back from rent versus 15 in Dubai. So there is still value in Dubai. In fact, we're coming up with a research paper. Hopefully we'll publish it next week. It's a large paper that talks about, is Dubai a tier one? Has it become a tier one status? And we look at cap rates as a determinant of that. We look at cap rates in New York, in Paris, in London of 2%. Why is it 6% in Dubai? Is the risk that much higher in Dubai that people perceive it as high risk? And as the geopolitical risk that's associated with Dubai, is that a real risk or is it the opposite? So all of these factors combined lead us to believe that there is still upside.
So where are you more bullish about? Is it the high, ultra luxe? And probably the last 6 months, we've seen quite a lot of developers shift attention to that segment. Are you still think the affordable, there's a gap? I mean, it is fact that a lot of developers are late with their deliverables. In a way, this helps a little bit the demand and supply. But reality is there's quite a lot of product being input, not just from what's ready, but on and off plan. So is there a particular segment you think that one, if you want to put your money, go for that one?
So that's a great question, Cecilia. Look, today, if you open Google Maps and you look at the Dubai map, right, there are areas where you can't find supply of land. And these areas will, regardless of what you do, they will thrive, right? So we always talk about a golden square that starts at kind of downtown Business Bay, moves towards the Jumeirah Bay area and the canal, moving towards the canal, crossing it to La Mer, and then back to the IFC within the City Walk area as well. So that area, if you look at it, there's absolutely no supply. Anything that you do, Bulgaria residences and the ultra high end segment of the market, to what you have in downtown and the canal, which is mid to high, and then the IFC and the likes, that sub-market will continue to thrive. Another market that's even probably more apparent in terms of need, and you're very familiar with it, is villas and townhouses. So if you look at the Dubai map, are there any plots today where you can have a look and say, you know what, it'll be cool to have a community in this way? But there isn't. There aren't lands available for development for villas and townhouses. And we're seeing a trend of people trading up from apartments to villas to townhouses.
Since COVID, we've seen that one, yeah.
And that's why this market, the villas and townhouses, as well as the ultra high-end segment, these were outliers in terms of outperformance compared to the rest of the market. So they've performed better. We still continue, I think we will still see a great need for ultra high-end ready supply and villas and townhouses in the off-plan segment of the market.
Back to the IFC, we have a lot of investors and tenants who are watching us.
Yeah.
And they want to know how the IFC, since you have a lot of experience there, differs in terms of laws, regulation for tenants, for investors. Anything particular they should be aware of?
So, in fact, there are favorable laws in the IFC. Sometimes as they say, you get what you pay for. In the IFC, for example, it's 5% for transfer fees versus 4% in the LD in mainland. The 5% fee comes with its perks. For example, the tenancy laws in the IFC are more favorable to the landlord, whereby you have a 1-year contract, it's a 1-year contract. At just 3 months prior to the end of the contract, you can just notify the tenant that they cannot renew, that you do not want to renew, and they are out. There's no two ways about it. There's no 2 ways about it. And the mainland, it's a 1-year notice. So even if it's 3 years, even if you have a 1-year contract, you have to notify them 2 or 3 months prior to the tenancy end that you wish to not renew, but then you'll have to give them a 12-month notice. So that's more the IFC friendly in a way. And I think there's also because it's a small area in terms of supply, so it's becoming very active. We had an amazing experience in an acquisition that we did at some point last year in Burj Daman, where we completed a transaction with a publicly listed company in Abu Dhabi. They owned a large portfolio in the building. We acquired the inventory that they had, roughly around 200 or 250 million worth, and it was a seamless experience. It took us 7 to 10 days, I think, working days, to transfer institution to institution, company to company, several UBOs and the likes. It was a seamless experience. So even from a legislation perspective and reforms, they've actually done quite well in ensuring that these practices are very seamless. We're doing transfers online. We don't have to be present there or have a POA present at the transfer signing. You can actually transfer online in the IFC, which is also great.
I want to shift the conversation into commissions a little bit.
Okay.
And
our favorite topic.
It is. So sometimes people forget we're in a service industry, and therefore the way you get paid through commissions. But I feel that until today, you have situations where brokers offering kickbacks from developers. Then you have the resale market itself, a little bit of inconsistency where some agencies will charge the sellers, some changes will charge the buyers, and someone would just don't charge or charge half. What customers should know when it comes to paying commissions, and what would you change if you had a magic wand?
In a perfect world, buyer's broker 2%, seller's broker 2%. The buyer broker and seller broker should not be from the same company, or there should not be conflict. But that's not the case today. There are a lot of, and if it's an exclusive property, then it's a 4% fee paid, shared by both. But it removes that conflict. If it's the same broker representing both the buyer and the seller, then you will inherently have conflict because he will take the interests of one versus the other just to try to close the deal. And in many situations, you end up compromising on the commission so that you get both parties happy. And we see, I'm a big proponent of full transparency at the beginning of a transaction. We see a lot of situations where the seller's broker says, you know what, I'm charging you 8% or 10% or a set amount above the asking price. Well, you want 4.5, I'm getting you 5, pay me 500,000. And in this situation, and many situations like this, the seller's broker loses the deal because you'll have someone else coming in, or worse, the buyer finding out that the property is actually not worth 5 million, it's worth 4.5. And then he can get it for 4.5. And then another broker will slip in and say, you know what, I have the same property. I'll sell it to you for 4.5, but that greed that came in lost that guy, that other broker, the deal. With transparency, you tell the seller, I'm charging you 2%, regardless of what price you agree. It's clean, it's straightforward. Same with the buyer, the fee is 2%, that's the law. And this way, you'll get them both you'll get to that equilibrium quite easily. On the kickbacks side, that is a question or a phenomena that is very difficult to crack. So the developers can't crack it, the land department can't crack it. Obviously, the brokerages, the brokerages that don't indulge in these practices, they can't crack it,
and they end up losing.
They end up losing, exactly. So that's the unfortunate reality. And because these deals happen behind closed doors and under the table, the likes, unfortunately, it's tough to crack. If I have a magic wand, I just want someone to tell us, or some kind of tool with the tech world today to tell us there are practices happening from certain institutions. But I wish I had an answer to that, Cecilia. Do you have an answer?
I think it should be a practice and a number that is locked in, non-negotiable. I think people still negotiate on that, but we cannot enforce at the same time. It's not enforceable. Because when you sign the form, you can put whatever percentage you want. Yeah. The market more or less decided is a 2%, but it could be more, it could be less. Yeah. So I think if we standardize as a unique fee, I think that would help the debate.
And sometimes it comes actually from investors who go and talk to brokers. Give us part of your commission.
True.
So some other brokers will do it. Because if someone wants to cheat, he will cheat regardless of forms, regardless of regulation. And that's the question I think we have here when we talk about technology and what kind of technology can help us to become more transparent, more innovative as a real estate market here in Dubai.
We believe as an institution that the main cog, and that's why we exist and that's why we coexist, that the main cog in the wheel of a transaction is the agent. And therefore, we want to create tools and provide tools tech tools that empower the agent. And that's what we live day to build. So we've started building our CRM for the last 10 years. We continue to develop that. We AI-fied it in a way where it's very agent friendly. It provides a plethora of opportunities to agents, expands their opportunity funnel without them being necessarily warm or cold prospecting. So our ethos as a firm is we want to create tools and predictive algorithms, machine learning tools and data science tools that would show these trends to agents and give opportunities to agents before or better than how other firms or other institutions would do it. And that's our main moat as an institution. And in a wheel of a transaction, you have the developer, you have the buyer, you have the seller, you have all of these moving parts, and you have the regulator and so on. But then the agent is what we focus on. And that's the wheel that we continue to turn in order to make sure that they turn faster than the others and they can make transactions better, quicker, more efficient, and help developers, buyers, sellers in a more efficient and better manner than the rest of the market.
We see in global markets more of cooperation and collaboration among agencies. Here we see more competition. Yeah. You've tried a venture to bring brokers together, but I think maybe the culture, what can we learn from international examples when it comes to collaboration rather than zero-sum game? No, the pie can be bigger, we can take more.
Yeah, so if you look at America, for example, in the US, the MLS system, there's no representation by one person to a buyer and seller. There's always different companies representing the buyers, representing the sellers, and very rarely, if any, would there be a transaction brokered by a single agency. Here it's the opposite. The majority of transactions are single agency transactions. And unfortunately, then you get practice. Okay, how do I find this? I have the buyer. How do I find this property without having to resort to the listing agency? Let me wait until the Form A expires so that then I can contact the owner. But the collaborative approach in Dubai, it has been a competitive market, and that's the nature of Dubai because it's very fast-paced. We encourage collaboration. Like you said, we had a venture of a real estate portal where we brought in several real estate companies together to build up a broker's-owned portal. And it was a tested case, tried in other markets that was very successful. Yeah. So it could have been successful here. The nature of the competitiveness of the market came in the way, and okay, I want to do it this way. It should be done that way, and just it's the exclusivity element of that venture was not really implemented or executed the way it was supposed to be, based on these differences and these competitive forces. Let's call it that, and that came in the way. A lot of companies try Purple Bricks, for example, in the UK, and Open Door, try to replace the agent by way of giving information, access to information rights, access to material. It's like
very low fee as well. Yeah.
And very low fee. But those businesses did not really thrive in the way that they were supposed to or it was intended to. And that's why you need that human element. When you're represented by the right broker that will tell you, that will give you not only because there's information, there's data, and there's behavior.
Yes.
The behavior element of the market is very important to a buyer, to a consumer, to a buyer and a seller. What's the market behaving like? What's the pulse of the market? These things only a good broker will tell you. Oh, I had a story of that buyer that did this. I have a story of the seller that did that. Psychologically, it formulates a kind of a decision or ensures that the decision-making ability of a buyer or a seller or a market participant overall is an easier one. So replacing the human element, it's like banking or consulting or legal. You can't have representation as a lawyer online or have an AI tool that will tell you what to do, because there's a lot in it. A banker, if everyone can bank and choose the right equities or bonds or mutual funds and the likes on their own without needing that kind of advice as a financial advisor, then it would be another game changer, but that doesn't exist. And I probably won't exist. That human element in a services industry where clients have to interface with the service provider, the person that's providing that service, I think in the real estate industry will prevail for a very long time.
And what misconceptions, if any, you would like people to know that you think that people do not fully understand about the market?
One massive misconception is that agents are bottom feeders and greedy, and they don't do much for their fee. That's a massive misconception, and maybe even a generalization, because we see the good agents that actually make the sharks, that actually make decent sums of earnings every year. They do not stop working. I see them. I think in their dreams they talk about their communities. It's that level of work, of hard work, of a hustle, of warm prospecting, cold prospecting, event management. They become marketing people. Rejection. People work for 3 months on a deal and then it just doesn't happen. And they already calculated their commission. They calculated their earnings. They started thinking about their vacation.
They spent it already,
but it doesn't happen. And it's really what happens to your mind. The psyche of that is not something that, and they don't earn a salary, right? That's something that people should know. These guys, their bread and butter is their deals. So without commission, they're not surviving. They're not eating. So I think that's the biggest misconception, I would say.
Yeah, I agree with you.
Abdullah, where do you see the market in the coming 5 to 10 years?
Today we have supply and demand dynamics really at work, because I think we all were in this market when the 2008 correction came, and then the sideways market post 2014. There were very clear index moves, right? Al Furjan and JVC and Downtown and Jumeirah Bay, let's say, they all go up at the same rate, 30% across the board. There's no reason. Speculative activity. It's just that people bidding the prices up without real demand-supply dynamics. Today, it's supply-demand dynamics really are working the market. So you see areas like Jumeirah Bay, where prices have actually tripled in 4 to 5 years. And some areas that barely moved in Dubai Land and areas like Sports City and the likes, that barely moved 10, maybe 20% over that period of time. That tells you one thing that's very important, that actually excessive demand and shortage of supply is driving the price increases and the changes in price in certain subsets, and the villas and townhouses, for example. And then in other subsets of the market, because there's not only existing supply, but also future supply, because you have a lot of land in these areas that will be developed in the future, that will create competition to what's already available in the market, that's keeping pressure on in these areas. So I think, back to your question, Dr. Mahmoud, 5 to 10 years from now, we're already seeing signs of a much more mature market. We believe that it's going to continue maturing, and you will see more. You go to London, for example, Mayfair and Knightsbridge is different than the east of London, than the south of London. There's a massive gap in prices. We're starting to see this here. We didn't see this, by the way, in Dubai like 10, 15 years ago. We were seeing, let's say, 1,600 per square foot or 2,000 per square foot in Jumeirah Bay, or 3,000 per square foot, and we're seeing 1,500 per square foot in JVC at the same time. Yeah. Now the gap is much, much larger. Yeah. Now it's more like 5x, not 2x. So so these things will continue to play out over the next few years, and it will continue to become more mature. I think the medium to long term is very positive for Dubai. The yields are still very high. You were talking 6% or 6.5% on average for Dubai. That's quite high. A compression of cap rates will have to come by way of an incremental price increase. So as if Dubai's cap rates were to come on par with places like London and other tier 1 cities, or Shanghai or the likes, or Singapore, then with a sharper price increase and rentals staying stagnant, not even going up at the same level, that's when you see cap rates coming down, and the perception of risk for Dubai globally would change.
If you had the ability to make a new law or policy change, whether for the market to become more efficient or faster, anything in your mind?
That's a great question.
That's the last one.
I think awarding market participants because of their practices would be something that's great. For example, you sell or you participate in more sustainability related projects that lead to the overall strategy or strength of Dubai as an economy or as a lifestyle or as a city, as you participate in ensuring that whether you're a developer or a real estate agent selling more sustainable projects or promoting more sustainable projects that yield to more green spaces that's in line with that vision, I'll reward these developers, give them subsidies, give them more easier leeways in their development process and approvals and the likes. Agencies or brokers that sell these kinds of products that are in line with that same vision. We're seeing now a great shift where I remember maybe 10 or 15 years back or even more, areas like Jumeirah Islands or Jumeirah Gulf Estates, they have so much green space. And actually the build in these communities versus the green spaces and
it's like 1/3 only.
It's 1/3, yeah. And then later on, we started seeing communities where a lot more brick than. Today, we're coming back to that sustainability, and we're seeing more green spaces in these communities. Like you said, Ghaf is a prime example of what can be done right, where there's a lot more green spaces, a lot more walkability. So I think rewarding one law or advantage that you should give to developers or brokers, reward those who are participating in this vision by way of a kind of a public-private partnership. And that's what I would like to see.
And it is amazing. Actually, Mahmoud, I think we need a session just on sustainability.
I would love that. It's a passion thing for me. Yeah.
Thank you very much for your time. It was great to have you here. And keep putting your LinkedIn posts. They're very good. I always read them.
Thank you so much.
They're very...
I've been late. I'll do one.
No, but they're very self-explanatory. And for people who are navigating the market, it's really good. So keep the good work.
With pleasure. Thank you so much, Cecilia. Thank you, Dr. Mahmoud. Thank you so much for having me. It's a pleasure.